The Dow Jones closed down 0.99% after a day of heavy losses. Image, Getty Images, Reuters. The tech-heavy Nasdaq led the losses and closed down 1.63%, while the Dow Jones ended the day down 0.99%. Despite a morning rally, which saw the Dow gain more than 380 points, afternoon trading saw the index suffer its biggest U-turn in nearly a year to close down 245 points. Meanwhile, the so-called FANG growth stocks, which include Amazon.com, Google's parent company Alphabet Inc. and Netflix Inc., posted sharp declines for the second session in a row, wiping out more than $200 billion in market value. Benchmark S. Investors blamed reports that President Donald Trump is preparing to announce further tariffs on Chinese imports by early December if talks between the U.S. leader and his Chinese counterpart Xi Jinping fail to de-escalate the situation. The world's two biggest economies have been engaged in an escalating trade war since Mr. Trump imposed tariffs on Chinese-made goods earlier this year. And it emerged today that President Trump is readying in tariffs for an additional $257 billion worth of Chinese products, Bloomberg reports. The prospective levies would likely increase prices for U.S. consumers and businesses and have spooked investors. The Dow experienced its biggest U-turn since February after plummeting in afternoon trading. Image, Getty Images. FANG growth stocks posted losses for the second session in a row. Image, EPA. Chief investment strategist at Janney Montgomery Scott in Philadelphia, Mark Luschini, said, "Obviously this trade skirmish is metastasising potentially into something worse than it already is." Meanwhile, the announcement of a new tax on digital firms from Chancellor Philip Hammond further wounded stock in the tech sector. In his budget today, Mr. Hammond revealed plans for a digital services tax which would kick in from April 2020. It would target established tech giants with a 2% levy and raise £400 million by 2021-22, according to Treasury forecasts. Investors were spooked by reports President Trump is preparing more tariffs on China. Image, Reuters. The new tax will likely hit firms such as Google and Facebook, which make huge profits from sales in the UK but have come under fire for the relatively low level of tax they contribute to Britain's coffers. Market volatility has spiked in recent weeks, driven by higher U.S. interest rates and concerns over economic growth peaking and trade tensions with China. Uncertainty caused by the U.S. midterm elections could also be playing a part, with Americans set to head to the polls in just 1 week. Christina Hooper, chief global market strategist at Invesco, said, "Probably the most pervasive headwind is concern about midterm elections. That is weighing down stocks, particularly technology, as there is greater concern about regulation."